Hello guys and welcome back to the channel. So two pieces of news came in yesterday that made me really worried about inflation. I see a lot of YouTube videos that are expecting that, the Fed is going to ease off and inflation is going to be under control towards the end of the year, and maybe the Fed will stop raising the interest rates and they will even maybe turn dovish. And unfortunately, these two pieces of news that came in really changed my thinking on inflation. I think it's going to be a lot stickier, a lot longer than we expect. I'm going to show you why. And of course, I was wondering how this will affect our favorite stocks, and basically the only stock in my portfolio, which is PLTR and Tesla, which I'm hoping to buy in the 500s, and I'm patiently waiting. Oh, by the way, if you like the channel, please make sure you hit the subscribe button. And if you want to support the channel and get access to all the valuations and tables that I use in these videos, then check out the first link in the description, which is for our Patreon. You can support the channel from $5 a month. So the first piece of news is that the EU puts a 90% ban on Russian oil, and they're planning to phase out the last 10% of Russian oil. The reason why this is particularly painful, it's the same in the US, is that this high oil price is completely, obviously this will keep the energy prices very high, and until the energy prices go back down or get switched over to something else, or the war ends. Obviously, if they could end the war if they wanted to, within a few hours, but obviously that's not happening, and therefore, the energy prices are going to keep being high. But here's what's so painful about this. This is 100% self-inflicted. So EU bans Russian oil. I believe US has also banned Russian oil, but the US was not as dependent on Russian oil as the EU. So what does that do with the price of oil? It makes it go up. And so it hurts the EU and the US. But does it hurt Putin? Because, he can just sell his oil to other countries that are very happily taking a discount on his oil. And if the price continue to go up, then even the discounted oil price is going to be higher than the price was previously. I'm not going to bore you with the details in the article, but Russia is basically saying yeah, we don't really care that the EU banned the oil imports. We're going to find other buyers, and India is happily buying, China is happily buying, and why wouldn't they? I don't blame them. So this is basically just very stupid political signaling and makes the inflation scene a lot worse than it would need to be. Then the second piece of news, which came on the same day, is Joe Biden's plan to fight the inflation. And what was really sticking out for me in that thing is that his plan to handle the energy crisis is to, impose carbon credits and green energy credits and, help the US switch over to green energy, which in theory is a very good thing, right? The only problem is that switching over to green energy is a multi-decade thing. So it's definitely not going to handle energy prices by the end of summer, and definitely not even next year or the year after. Here is, a little bit of summary of what he said. He's going to let the Fed do its job. Then he wants to address the supply shortages in the economy. Here you can see tax credits, and he wants to release oil from the strategic petroleum reserve. The only problem is that they have been doing it and the oil price have been going up, so it doesn't really do anything. I'm not gonna bore you with the details. So this is what really started my thinking to look at inflation and how does it affect our favorite stocks. So we're going to look at some things here. So in order for us to fully understand the situation, we need to look at, what has caused the inflation. Obviously, the uncontrolled money printing, and on top of 40% of all US dollars being created into existence in during the COVID era, the government has also done unprecedented stimulus, and this resulted in that the households have, I just had an article, it was something like 2.6 trillion saved up money. And let me know in the comments, but I feel that part of the problem is inflation is a supply and demand problem, right? So we need the demand to dampen. We already know that the supplies are in trouble. We have bad supplies and very high demand, partially because people have, lots of money from the COVID stimulus, and partially because many people haven't done anything in 2 years, because of the COVID lockdowns. They haven't traveled, and I feel it on my family. We decided that this year we're going to visit my grandparents in Hungary, and we need to drive there 2,000 kilometers, which is, something like 1,200 miles. And I can tell you, I don't give an F about the gas prices. We haven't traveled in a very long time. We haven't seen my grandparents in a very long time. The gas prices could triple, we would still go. And unfortunately, I think a lot of people have this mentality. Think about it, you didn't need to buy new clothes because you weren't meeting with people. You know, you didn't need to go to the dentist because it didn't matter what your teeth looked like. You weren't eating in restaurants. You weren't going to the movies. For example, Sweden ended the COVID and we had very light COVID measures, but still, me and my wife haven't gone to the movies, you know, for like 2 years. And the first time when we went, the movie tickets have almost doubled in price. And I tell you something, we didn't give an F. We were like, okay, it's $20 instead of $10 for the ticket, but I want to go with my wife. I want the movie experience. We haven't had it in a long time. And I think this is partially the problem. And I think this will only end once the consumer has ran out of all this saved up money and this money is flushed out of the system. Let me know in the comments. I'm very interested if it's just us. I don't think it is. Or you have the same, that you are sort of price blind because you haven't done things and you just want to do them and don't really care what it costs. You're just going to do them. Okay, so we know that the war is causing the energy prices to go up. Very self-inflicted situation. Then we have the supply chain issues, which again, the war made it worse. The China lockdown made it worse. And then we have worker shortages. So all these things obviously need to be handled before the inflation is going to normalize. We have had a market rally in the recent week, I would say. And, you know, many people started suggesting that maybe we have hit the bottom. And unfortunately, I don't think that it's possible to hit the bottom before we have handled inflation and the Fed tightening. So what is being done? They are, you know, doing quantitative tightening now, meaning they are taking money back from the market. The government stimulus programs are finishing, so this is helping. The energy prices, again, as I read, self-inflicted, making things go higher for, I don't know what, for political gains, I guess. It's not going to be lower until, I don't know, we all switch to green energy, which is, you know, decades, or the war ends and oil prices go down. Not a lot of hope on that front. Supply chain issues. China has the zero COVID policy. One solution is that you relocate out of China into countries that have saner policies about COVID. You know, the Russia-Ukraine war has done a lot of supply chain disturbances, and if the war is continuing, and it very much looks like it's going to be continuing, the only real solution is to relocate out of these countries. And, you know, you need to build new factories, you need to make new relations. Definitely, you're not going to build new factories by the end of this summer, like people expect. This is a multi-year process, not a lot of hope for that one. Worker shortages, obviously this will only take care of itself. So there would be a sort of easy way, very unpopular way to handle this, but I do think it should be done. Sweden is a very worker oriented, I don't want to say socialistic, but let's say, I know my audience is very much US, so from the US it's a very socialistic thing. And the problem is, I know also in the US there's so much benefits for people to be unemployed, and it's so easy to live life even if you're unemployed for many years before you need to, you know, start looking for work. And the problem is that, you know, many new companies in Sweden are competing with the unemployment benefits. Let's say that if you can make 80% of a normal salary sitting at home, you know, many times I've heard this from many Swedish entrepreneurs that, you know, when they try to hire people that are on unemployment, then the people say, okay, I mean, the salary is not enticing enough because just for 20% more, I don't want to wake up on time every morning and drive to an office when I can just sit at home, do nothing, and still get 80% of my pay. So I think this would be a perfect time to roll very much back on, you know, the unemployment benefits and really incentivize people to work. And that way, you know, you would add a lot of new people to the workforce and it would make it easier and it would drive inflation down. Obviously, this would be very highly unpopular, would be attacked from all angles, and I don't see that it will be done, especially not in the midterm year, but just saying it would be a solution. What does prolonged inflation mean? It will mean that the Fed will be more hawkish, interest rates will go higher than we expect and for longer than we expect, and growth stocks will be hurt like crazy. And very interesting here, I want to say that it's the stock prices that are going to be hurt, which will result in very interesting opportunities because some of the growth companies like PLTR, my favorite one, we're going to go into it. So then the other thing is the Fed might overshoot. This is my worry that, you know, the Fed can raise the interest rates to quite elevated levels. And then the families have this buffer, you know, so it creates this false picture like it's not really working what the Fed does. And then all of a sudden, you know, the families can run out of money and then we can, you know, do a pendulum swing and we suddenly find ourselves in, you know, a very deep recession, and then they have to go back to printing money. Very afraid of this. Yeah, and this affects the whole stock market. So here's the interesting thing. So if this is the case, it might cause a lower stock price for Palantir for an extended period of time. However, the very interesting thing is Palantir as a business is not going to be affected at all. So all our theses of, you know, what the company is going to do, how they're going to expand, how they're going to, you know, attract clients, it's all intact. It's still happening. The revenue growth is still happening because Palantir is working 50% with governments and the other 50% is the global 6,000 companies, and their revenue is very high quality. Basically, they have pricing power and the governments are going to use them no matter what. And these big 6,000 companies are going to use them no matter what. And the thing is, the war in Ukraine is a tailwind for them. It increases the need for their services, and the supply chain issues and, you know, a tougher market environment will want companies to, you know, better make sense of their data. It's going to have a 0% effect on the business. And this is actually a really good thing if you are an investor who can invest, you know, $1,000 every month or $3,000 every month or $500 every month, because you can build out a really nice position on a very long time. Do you remember this period when between 2013 and 2019 Tesla was trading at the same price, and for 6 years nothing has happened to the price? The company went from, you know, delivering 20,000 cars to 300,000 cars and, you know, showing that they could be profitable, and so much changed, yet there was zero reflection of that in the stock price. And if you had diamond balls and hands and you were just, you know, buying Tesla stock, imagine the position that you could build out in those 6 years. And then the stock 20x'd. It was really, you created generational wealth. You took care of your family, you know, your pension, everything in that one go. But you had to be really sure in what you're doing and had diamond balls and hands. Not a lot of people can do that. So I hope and think that if the inflation is prolonged, Palantir is going to have a similar time. It's going to do nothing for, you know, 1, 2, 3, 4 years. And as long as the fundamentals of the company improve and, you know, they keep getting better and better numbers, I'm going to be, you know, buying with every money that I can, as long as the thesis doesn't change and it becomes a fantastic opportunity, even though it will be very annoying and maybe doesn't seem like it right now. But really think, what do you prefer? Do you prefer that you buy Palantir for $1,000 now and then the price shoots up to, I don't know, $30 a share, and your $1,000 becomes $3,000, and then you don't know what to do with the stock because it went up so much? Or would you rather that you can build out a 100 to 3 to 400,000 position, and that 400,000 position after 3 years goes to $4 million? I would rather take the last one any days, even though it's the harder. So now Tesla, this is a different animal, and this is much harder than Palantir. So it might also have a lower stock price for an extended period of time. However, Tesla is not a recession-proof business because car companies are not really recession proofs. It's very easy. When money is easy, people are buying new cars. And, you know, when money is tight, then people keep their old cars and, you know, they drive them longer, or they, you know, simply don't buy expensive cars. This might mean that they might have to slow down on their expansion plans. Remember that their goal is to go up to 20 million cars produced per year. Very hefty goal. And you have to remember, I did this valuation model that you can access in Patreon and you can see in many other videos, but Tesla's stock price is super dependent on their growth and their margin. If the growth would disappear from this company, Tesla stock would be a $67 stock. I know it's shocking. It would make Gordon Johnson right, but it would be true. So this is how important the growth is to Tesla. The recession, like when I say that the recession hits them, I mainly mean that it hits the growth. So it doesn't mean that, you know, they would go from 1 million to 500,000 cars. It would mean that they don't go from 1.5 million cars and they don't grow 50%. Maybe they grow 10%. That would crazy hit the stock price. It would be very, very painful. On the other hand, the high oil prices makes me think at least every day of, I already have 2 electric cars and my daily driver is a gas car. I'm thinking every day I would save so much money owning a Model 3 right now. And I'm sure that there's so many people who are doing this. So maybe they will win on this. This is what makes it so hard to predict. So when this is the case, you just have to make sure that you are going in at a price where you're compensated for this risk. In the model that I did, I basically already went way lower. Management is predicting, 50% year over year growth. I went with 30%. I am giving them a leeway on the margin because they're so back ordered with the cars. And as long as they don't need to lower the prices and, start advertising and they can, sell FSD, the margins are going to be fine. And I don't think there's a significant risk of them needing to advertise and lower margins until the vehicle production reaches 4, 6, 7, 8 million, because they're just so back ordered. Like they could sell 0 cars, they could have a total demand destruction, and they would still increase because so much back orders. So the point that I'm trying to say here is I believe the stock price is going to be around $2,000 in 2025, and with my pessimistic calculation, and I want a 30% return on the stock for me to feel compensated for the risk. So that gives me a price today of $728. Now I'm hoping to buy the stock for around $500. I haven't bought Tesla stock yet, but I have sent with my dad money to the broker account. A 500-ish price would mean a compounded growth of 40% per year for the next 4 years. And that would make me feel totally compensated for the risk that you take with Tesla. So Palantir, super inflation proof, super resistant to the Fed and what happens. Tesla, not so much, but it's very, very undervalued. And if you can get a good price, I believe it's still a fantastic deal. Thank you very much for watching, and I will see you in the next video.